Hi everyone, this is Vidushika Perera from First Capital Research, and here is the economic recap for the month of October. And in this video, I will be covering the following aspects in relation to the economy. Starting off with CBSL update, central bank issues new rules on conversion of export proceeds. The Monetary Board of Central Bank issued new rules in respect to repatriation of export proceeds into Sri Lanka and conversion of such export proceeds to Sri Lanka rupees. So the new rules are applicable for both exporters of goods and services in Sri Lanka. These new rules require exporters to convert the residual, that is the remaining balance of export proceeds, into Sri Lanka rupees on or before the 7th day of succeeding month. And they are authorized to make the following payments: outward remittances in respect of current transactions, withdrawal in foreign currency notes, debt servicing expenses and repayment of foreign currency loans, purchase of goods and obtaining services, payment in respect of making investments in SIDVs in foreign currency up to 10% of the export proceeds. And accordingly, with the issuance of these rules, exporters are able to meet all the expenditure relating to exports of goods and services out of the export proceeds. Moving on to inflation. Inflation for the month of October, the month-on-month inflation recorded at 1.9%, with the increase of food items by 2.8% and the increase of non-food items by 1.5%. And the year-on-year inflation recorded at 7.6%, with the increase of food items by 12.8% and the non-food items by 5.4%. And on the month-on-month inflation was contributed by 0.91% from the food category and the non-food category by 1.03%. And within the food category, the price increases were noted in rice, milk powder, coconut, sea fish, limes, and so on. While the non-food category inflation was led by housing, water, electricity, gas, and other fuel, restaurant and hotels, furnishing household equipment and routine household maintenance, clothing, and footwear. The year-on-year inflation was contributed 4% by food items and 3.68% from the non-food category. And within the non-food category, restaurants and hotels, transport, housing, water, electricity, gas, and other fuel, health, furnishing, household equipment, clothing, and footwear were noted as key elements. And talking about the NCPI for the month of September, recorded a decline of 6.2%, mainly driven by the decline in food commodities, while the non-food commodities remain unchanged throughout the period. Moving on to M2B and credit growth, the private sector credit improved to LKR 29.1 billion in September, while sustaining the positive growth momentum for the 14th consecutive month. And the state credit reflected a net borrowing of LKR 96.3 billion. Moving on to liquidity and reserves, foreign reserves declined to USD 2.3 billion in October as a result of the inadequate inflow of foreign funds. The market liquidity remained negative and witnessed a continuous deterioration during October 2021, despite the frequent injection of liquidity from central bank via term reverse repos and increased CBSL holdings of government securities. Moving on to the currency movement, the rupee remained volatile throughout the period against USD and recorded a depreciation for the month of October, while in relation to other global currencies, rupee recorded a depreciation against almost all the other major global currencies. In terms of the government securities, the government security, the bills and bonds maturities were recorded at 442.5 billion for the month of October, while the new issues were sums up to 362 billion for the month of October, while creating a deficit of 80.5 billion. And the CBSL holdings of government securities continued to rise throughout the period, and it was increased by 134.6 billion in October 2021. And treasury bills and bonds. The secondary market yield curve witnessed upward movement during the month of October as a result of the continued pressure stemming from the yields quoted by the market participants, despite having a lackluster performance for the most part of the month. Moving on to finance sector rate movements, AWPR witnessed a notable increase against AWDR, which remained constant throughout the period, while creating a significant interest rate of 3.03% for the month of October 2021. Moving on to the external sector, the export recorded an improvement of 16.2% while recording 1.1 billion of exports for the month of August, while all major subcategories, including industrial exports, agricultural, and mineral exports, recording a notable improvement throughout the period. Moving on to imports, despite the ongoing restrictions, imports were improved by 30.8%, while recording 1.7 billion of imports for the month of August, while major subcategories, consumer goods, immediate, investment goods were notably improved throughout the period. And the trade deficit was recorded at 587 million USD for the month of August. The balance of payments from Jan to August 2021 was recorded at minus USD 2.4 billion, while Jan to July figure amounted to minus USD 2.8 billion, while recording a net inflow of USD 0.4 billion for the month of August. And the worker remittance declined to USD 447 million, recording a decline of 32.8%, while the earnings from tourism improved to USD 7 billion, although the Jan to August figure declined by 95.2% year-on-year basis. On a positive note, the tourist arrivals for the month of October was recorded at 22,771, while the largest source markets recorded for the month were India, UK, Pakistan, Russia, and Germany. And in the global markets, major global indices were improved throughout the month of October. So with that, we wrap up the economic update for the month of October, and stay tuned for more economic updates in the next month. Thank you.